So can China strike a balance between growth?
And there's not a number of countries that have seen good upgrades.
We saw recently when India declared 5.7%.
Welcome to Friday Takeaway. It was a key week for the central banks. The Fed expectedly raised rates only the third time in 11 years, and so did China, though it did so unexpectedly and only in its open market operations. It said it reflects market expectations for higher funding costs with inflation on the rise. And back home, Petronas CEO, Dato' Wan-Zul, they reported a 12.5% full-year net profit gain, though mainly due to cost management. The overall revenue picture, though, is not so great. It saw a 17% drop due to the still weak macro conditions. But more worrying, though, it is still pessimistic about oil prices in the second half, forecasting just $45 a barrel on average this year. Meanwhile, Britain's looming exit from the euro has delivered untold volatility on the British pound, and after some confusion as to when Article 50 might be invoked, we've now learned that Brexit talks will only start at the end of March. With that, the pound has lost ground, with one quid currently buying 548 ringgits. A quick look now at the KLCI. As at 9:45 am, the index is up 0.3% to 1,742 points, higher by 1.4% from last Friday's closing. Year to date, the CI is up by 6%. Next up, some big weekly movers. So, EcoWorld Development Group Berhad. It's Malaysia's fastest rising property player, chaired by former SP Setia boss Tan Sri Liew Kisin. It's up by 3.3% this week and 16% so far this year. Yesterday, it reported Q1 profits that flew 461% to 116 million ringgit, mainly due to the EPF buying its contracted 40% stake in the Eco Grandeur JV. But still, it said sales in the quarter doubled year-on-year to 850 million ringgit, and the company says that even in the current weak environment, it should still hit its 4 billion ringgit sales target for fiscal 2017. Oh, one more thing. The IPO of its EcoWorld International Associate Unit is coming soon. Malaysia's macro picture is still weak, and in KL, where projects like its Bukit Bintang city centre might still suffer from an oversupply of office space and retail. Meanwhile, some also say that the weak pound and overbought Aussie real estate market might hurt prospects at EcoWorld International. 7 buys, no sells. Here's a speculative stock, Priceworth International Berhad. They parlay their timber concessions into floors, furniture and other wood products, and they've also expanded into construction and property development. Priceworth triggered the Aegis Momentum algos a couple of days ago, maybe linked to the 10% stake that RHB Group founder Tan Sri Rashid Hussain and his wife are buying the company. Priceworth is raising 260 million ringgit to buy a 100-year timber concession in Sabah. As recently as last November, Priceworth Executive Director Richard Koo said debts remain high and liabilities exceeded assets, and demand from China is still ropey. It's a tiny company, just 150 odd million ringgit market cap, so no coverage. But its shares are up 95% so far this year and 47% in 1 week. And that's it. Thank you for watching Friday Takeaway.